Hey there, pro traders, and welcome to another Monday market review with yours truly, Ian Giffen, on behalf of the GoPro Trading Academy, where today we'll be running through, as always, many of the instruments that we are looking to trade. And also, I will be giving you a bit of a rundown on some of the trades that we took last week, showing you good and bad trades, or trades that worked out. They're all good trades, actually. But both trades that worked out and those that didn't, as well as a look at what we're currently considering in terms of instruments and charts where the conditions are suitable to our strategies. And starting off, as always, I just wanted to give you a quick rundown on the current market themes that are predominating at the moment. And obviously the whole Russia-Ukraine debacle is very much top of the bill. So the invasion of Ukraine has clearly caused a lot of turmoil in global markets. I think we see it most especially on the indices, which we will look at. But nevertheless, I'd say that from a personal point of view, I was somewhat surprised last week that the rush to safe haven type instruments was not more pronounced. Having said that, I think after the weekend, we've seen some significant gaps in that direction. But nevertheless, it also goes to show that it's important not to try and predict what's going to happen based particularly on news events. It's a popular technique in terms of things that are sold when it comes to trading, is how to trade the news. But in reality, very few people actually make it or are successful in the long term doing that, simply because there is no way to know what has been priced into the market and what has not. So I think the longer term build up to the Russian invasion of the Ukraine, which wasn't completely unexpected at all, I think a lot of that may have been priced into the market already. But anyway, let's have a look at the instruments and see how this is all panned out. Firstly, on the weekly time frame here on the Euro US dollar, the most traded instrument by far in the world, we see a gap over the weekend. Clearly, you can see how the market gapped outside of our HTC channel. But last week's load test hammer candle being something of a surprise with that Friday recovery. And you can see that obviously on the daily time frame, where on Friday, the latter part of Thursday and into Friday, the market came straight off of that support level on our daily HTC and LPO channel. You can see they're in confluence at the moment. So that was interesting. And then it gapped, as I say, over the weekend down to that support level and is coming back again through the course of the early part of this Monday. So at the moment, we're still waiting to see if that breaks out of the channel and moves further south, giving, again, a move away from a slightly riskier type of asset, which would be the euro, towards a safe haven investment such as US Treasury bills, which would require the purchase of US dollars and therefore would potentially give us a bearish breakout of this channel. All right, so that's the euro. On the pound, the cable, we can see how, again, last week was quite a strong bearish impulse candle, but bounced back in the latter part of the week, also with a gap over the weekend. That's a common theme that we will see. Let me just update this channel quickly. Not sure why I didn't do that. In any case, not that it affects us at all. That's narrowed down a little bit on the HTC channel. We're very much inside of this channel on the weekly time frame, so nothing doing for us there. There's no valid WM class 1 patterns. But on the daily time frame, likewise, we can see the support level of our HTC channel being threatened here. There's no valid pattern yet either, but through the course of this week, we may well get that. So just keep an eye out for the end of a retracement over here and a bearish resumption. So if you are a more aggressive trader and purely trading those class 1 patterns, regardless of whether we are inside or outside of the channels, then there may well be a setup shortly. Let's see what happens today as well. You know, we don't know if this resistance level is in fact going to hold. We may end up with another high test with the market coming back down. Remember, Mondays, we very often get this choppy behavior. So there's still some time left in the day. Let's see what happens then. Here we are on the dollar yen. You can see that here we have got very much at the moment a pair where the the two currencies are pretty highly correlated. Now, the yen and the dollar, the US dollar, are definitely the two primary safe haven currencies. So you would pretty much expect quite a high level of correlation between these two. That's visible here on the weekly time frame. So nothing for us to do, of course, on that, just as an observation. And likewise here on the daily time frame, it's just chopping sideways, through the course of the last week. We're not interested in trading anything like that at all. There's nothing valid for us. All right, dollar Swiss. This is not really the mirror image that it very often is of the euro dollar. That has changed a bit, and we can see that obviously also on the euro Swiss. But here on the dollar Swiss again, it's a weekly time frame, but very much sideways, right in the middle of this HTC channel. Nothing for us to do. It's certainly respecting both support and resistance across the board. And here the daily time frame, likewise, nothing valid at all, just chopping sideways. So I'll just move through some of these more quickly, as we're not interested in them at all. USD Cad on weekly, an interesting one here as well. Normally when we see the we see oil going up, the Canadian dollar is very much an oil-based currency. We typically we would expect to see more strength in the Canadian dollar. But of course, if we are comparing a strong oil-based currency to a safe haven currency, there may well be additional correlation there. Nothing for us to look at on that time frame, also very much inside of the channel. You can see how the US dollar did break out on Thursday, but then retraced very strongly and immediately on Friday. And again, let me just update this. For our HTC channel, not that anything has changed at all. There's no material change here for us. But I know that I will have a few questions if I don't have this fully updated. Right, there we go. So pulled back inside of the channel, gapped again over the weekend, but still inside of that. So again, nothing for us to touch there. And this is, let me just reiterate, one of the things that surprised me a little bit. I was expecting to have more trading opportunities. We did have several, which I will show you, but I did expect more based on what happened last week. Right, here on the Aussie weekly time frame, almost got a bullish impulse candle, but not quite. But nevertheless, on the weekly time frame, nothing for us to look at. And here on the daily as well, it tested the top of our HTC channel, but chopping sideways once again. So still nothing for us to look at. The Kiwi, which gave us more action over the last couple of months, has also died, really. It's died off. There's nothing for us to do here on a weekly. A reversal pattern now, where you can see where we've in fact had a phase two followed by phase two, and that low being ringed by last week's bullish impulse candle. So that New Zealand dollar weakness has now pretty much come to an end. And remember, that weakness in relation to US dollar strength is what gave us this bearish market for quite some time. And another surprise, and this is why I refuse to get drawn into making predictions in my trading. It's all well and good if you're a talking head and you're an economist, and that's what you get paid to do, which is to talk. But if you get paid on results, don't bother trying to predict something that's not predictable. And all of this is great proof of that. All right, so here we can see that bullish cyclicity on the daily time frame. It's finding resistance in the area of the daily 55 EMA, which is very often in this case, resistance area for a phase two on the weekly time frame. It's come back to the daily 55 EMA. So that's quite interesting, especially, or you can see how on Thursday we got that very strong bearish move, bounce back again on Friday. Nothing for us to do here yet. We have been looking for a breakdown in the sequentiality of the cyclicity. Potentially that could have led to a resumption in that bearish trend, but the trend has actually broken down now on the weekly time frame. That cyclicity having come to an end. So now we really have to bide our time and wait and see what's going to happen here. Right, so moving on to our yen crosses. You guys know that I like to keep the yen pairs together because of the high correlation. All right, so euro yen on weekly, nothing doing, just quite a significant hammer candle here on the weekly time frame, but quite a big gap over the weekend. What is that? Let's just have a quick look. Closed up there, opened down there, over 200 pip gap. So these are the kind of things that our brokers warn us about, and certainly many of You should have received your warnings from your broker last week about potential liquidity issues in the market. And certainly gaps over the weekend at times like this are quite a big thing. So that can work in your favor as well as against you, but certainly it's pretty important to be cautious about that. Liquidity or lack of liquidity being the number one risk we face as traders. All right, Euro Yen on the daily, however. Again, I don't know why I didn't update this. I thought I'd done all this work on the weekend for you guys. Let me just do that quickly. Right, I'm not going to update for today's candle because the day is not yet over and we don't know where we're going to end up. Albeit that this in the end hasn't changed the dimensions of our HTC channel at all. What we could potentially have here, of course, is if we do get a rollover, which is kind of complicated by this big gap here, but if we do get a rollover, this is obviously a potential, it could have been a potential class 1 pattern, but I see that Friday's close was in fact inside of that previous phase 2's price territory. So just bear that in mind. Weekly time frame again on Gbp Yen, where we can see there's nothing available to us on the weekly time frame. That's why we haven't had any, we've had very few daily impulse trades so far this year. But obviously the H4 impulse certainly is made up for that. But it's still pretty sideways movement here. So if anything, if you're trading an overlay strategy, you would probably be getting the most trading opportunities. All right, just having a quick look on daily. Again, we see that strong movement to the latter part of last week, but still inside of the channel, and we still don't have any valid class 1 patterns on this either. Swiss Yen weekly, sideways, daily, very sideways, as you can see, of no interest to us at all. Cad Yen, sideways on weekly, sideways on daily. It's tested the support level of our HTC channel. But the test failed, certainly nothing breaking out at all. This is why, folks, it's so important to be able to sit on your hands and do nothing, because if you try to trade these choppy markets, you're going to get burnt. Right, so Aussie Yen weekly. Now, we did get a bullish impulse candle last week, so you can see some Aussie strength over there, and that's visible like this on the daily. You can see it really just wrapped up the week with that bullish impulse candle on Friday. And that was it, because apart from that, you can see this even on the daily time frame is very much sideways. Same thing with Kiwi Yen. Nothing of interest at all. Tested the resistance level, pulled back inside of that channel. And that's the yen pair. So still nothing really for us to look at. Euro GBP. So last week we had a bullish candle there. I think it just made it to an impulse candle through the course of the week. But of course, this is no longer a trend. We treat an engulfing candle. This is a bullish engulfing candle. We treat that as the start of the next wave. And as a result of that, we're now saying that we assume that this bearish breakout was a false breakout. The potential trend has not, in fact, turned into an established trend. And therefore, we've got a phase two, giving us that next wave. So nothing there for us at all. Just a bit of a learning opportunity there. Euro GBP here on daily time frame, also sideways, finished the week with a strong candle, but it's still nothing. And look, even though we got that strong bullish impulse candle, gapped all the way down to the bottom of that candle through the course of the weekend and opening all the way down there this morning. So still nothing. Euro Swiss, you can see how that correlation I was talking about between the euro and the Swiss franc hasn't been around for quite some time, with overall euro weakness against the Swiss franc strength. We know and have known for quite some time now, a good couple of months, this bearish trend is over. We got this strong bullish impulse wave over here, but it hasn't turned into anything at all. And last week, of course, we just got this this bearish high test candle, so a low test candle, I beg your pardon. So it's a bullish hammer. Nothing for us to do here. And here, even on the daily time frame, what we could say is that overall, this potentially is a class 1M pattern, certainly with the gap over the weekend. But because of that strong gap over the weekend, we actually need to look for bearish cyclicity on the lower time frame. Kind of messes things up a little bit. So you need to sit on your hands and wait for the picture to clarify itself. Eurocad, likewise on weekly, nothing doing at all, just going sideways overall. And obviously, we've had all of these gaps over the weekend. which are pretty visible here on the daily time frame. On this one, we're still inside of the channel. It's broken below this support and resistance level that we had before, but nevertheless inside of the channel and no valid pattern. And although we had that strong gap, that gap has been filled over the course of this Monday morning, but nothing for us to trade. Euro Aussie on the weekly time frame, you can see we've had 3 strong bearish candles. So nothing doing on the weekly time frame, but dropping down to daily. This is something that I know that several of you folks have traded. Diesel, I know you in a couple of these, and that's worked out pretty well. We also ended up with a close outside on Friday. The market is very much outside of the channel. Again, remember, we've had this gap, so we just need to wait for things to settle down a little bit. But having said that, if you look at the cyclicity here on the 4-hour time frame, it's still very much bearish. And those of you who didn't bother to wait for things to pan out would have probably shorted this market at the close of the 4 to 8 a.m. candles. So at 8 a.m. this morning, you would have shorted this market already. So not a bad trade at all, has to be said. And you can see some significant volatility in the first 4 hours of the day this morning, just to close that gap. Right, so last of our Euro crosses, again, we had 3 strong bearish candles over the last several weeks, dropping down to daily, still inside of this channel, and no valid pattern. So those of you who are hyper aggressive, I know may have taken a couple of bearish trades over here last week, and it worked out well for you. But if you being a little bit more conservative, especially those of you who are trading your funded accounts, where you have to make sure you don't get that maximum drawdown on your live funded accounts, you would have stayed away from both of those. All right, so that's the end of the Euro crosses. Looking at the GBP crosses here on the weekly time frame for Gbp Swiss, you can see that yes, we did have a bearish impulse candle last week, but nothing else of interest for us on the weekly time frame. Of a bit more interest is what happened here on the daily time frame, where we did get a rollover through the course of last week. And again, I could update this. Not sure why that hasn't been done. Give you that picture quickly. And of course, if today's high gets ringed, we'll be making another update to the analysis on this chart later tonight. Right, so that certainly brings our channel marker all the way up here, which means that as of this morning, well, actually, in fact, as of when we had the close on Thursday, when we had the breakout from Friday morning, in fact, you could potentially have been looking to short this, but I don't believe, certainly with the time frame available to us, that there were any opportunities to go short on Friday. No, you can see through the course of Friday, it was this bullish movement, and you know what those final selection criteria are for a bearish impulse trade, and we didn't get that final criteria here with any of these candles. And then there's the gap over the weekend again. So if you're aggressive, you may well have taken a trade here already. Just look at the daily again. If you are, that would mean that you take, it's a hybrid trade, it's not an impulse, because technically, as of this morning, we were looking for the breakdown of this phase 2 wave. Looks like we've got it. And as a result, you would have shorted this market. In fact, you would have possibly shorted it, depending on the dimensions of this candle, again, at about 8 a.m. this morning. So that would be a valid hybrid already this morning. Okay, that's Gbp Swiss. Looking at Gbp Cad. Again, weekly time frame. Last week, very strong bearish candle. And that's what it looks like on daily. So where we had what's effectively a false breakout here, we've had a phase 1 followed by a phase 1 or impulse, definitely an aggressive reversal back inside of the channel, not currently really tradable. We need for the market, certainly not tradable on the time frames that we trade. But if you're trading down on the intraday time frames, you'd still be sitting on your hand on this Monday, but you would have done quite a lot through the course of Thursday and even possibly Friday. Right, Gdp Aussie, again, here's weekly time frame, strong bearish candle. This is definitely one that we got into last week and are still in a trade on this, if I'm not very much mistaken. Had the bearish breakout already on Wednesday and started looking for opportunities immediately after that. And if I'm not mistaken, we shorted the market. What's this time over here? That's the 12 to 4 p.m. on the 24th. That's correct. So we would have shorted this pretty much around 4 p.m. And the trade manager has been doing his thing ever since. This is pretty picture perfect for those of you who are trading the lower time frames. And I think our original stop was above that previous swing high. And well, we actually using advanced targeting on this. And just wanted to show you how that would pan out. Remember, using the 3-6 rule, we actually got the stop trail to break even pretty much at this low point over here. And following that 3-6 rule, we are now all the way down here with our trading stop. So we've locked in a reasonable amount of profit. We don't want to give away any more. But if this does bail, if this does carry on in a bearish direction, then all well and good. If you use short targets, then you would have hit your take profit, most certainly. I think it was about a 2.5 to 1 reward to risk ratio. And you would have probably re-entered, in fact, just very recently, about half an hour ago. So this would be another re-entry opportunity for those of you who are using the short targets on H4 Impulse. So this is probably the best, in fact, it's definitely the best of the currency-based instruments in terms of the core strategy that we trade, being, of course, the H4 Impulse. Right, last of the GBP crosses is GBP NZD. Another strong bearish impulse candle on weekly, but nothing else for us there. But it was only Friday where we finally got that breakout. Couldn't trade this at all. We didn't have a valid Class 1 M pattern here at all, but we did get a bearish breakout on Friday. And so far, it is respecting the resistance level. So certainly another one to keep an eye on. And in fact, another one where you would have shorted this just about half an hour ago. So that would be your initial stop. And if you're using short targets, your take profit, well, I'll see that immediately here. I don't want to waste your time on that. So, that would be approximation. That's if you're using standard targeting and not the advanced targeting. Not going to bother too much with the artwork. But let's just quickly change that to blue. And yeah, it's early in the trade, obviously, but it's looking promising. So nothing wrong with that. That's the one thing that's been interesting, really, I suppose, across the significant market volatility that we've had over the last week has, in fact, been the pound's weakness. All right, the other crosses, here's CAD Swiss on weekly, nothing of interest there at all, and likewise on daily, so won't waste your time here at all. Bullish impulse candle on Aussie Swiss for last week, but still testing and fading the test on that resistance level. So still nothing doing there for us either. Looking for a bullish breakout, but so far nothing. Aussie Cad, similar kind of picture as you can see, nothing for us to do here on weekly. Now remember, technically, this is still in a bearish trend, albeit a weak one, but it's a very extended phase 2 retracement wave, now having lasted a total of 4 weeks. And a couple of those candles were impulse candles as well. So here's what it looks like on daily. You can see that this is this did provide a trading opportunity at some point. Not sure what exactly that is, so I won't waste your time on that. But we did have the breakout, as you can see. We know we had the breakout. We were actually, I think, discussing the potential for that last week. I think that was Tuesday. Wednesday, Thursday, Friday. Yeah, so Tuesday we had a closeout side. In fact, Monday we had a closeout side. So I think it was immediately after that. So if we drop down to H4, there we go. It would have been, yeah, on the 25th, the 4 to 8 a.m. candle. So just after 8 a.m. On Friday, we got into a bullish trade, but it didn't work out. This is an example of where we actually got stopped out already, and I'm very happy about that. We got stopped out on Friday. You can see how it came down, would have touched that line over here. But it's a good thing, because had we stayed in this trade over the weekend, we would have been closed out all the way down here again. So, well, that was a loser. We only lost about half of our original stake on this. So perfectly happy with that. But it is an example, and a very good example, of why you need to be really careful in these highly volatile times of holding positions open over the weekend. All right, so that one's a goner. happy with that though. Right, Aussie Kiwi. A lot of folks have been trading this over the last few months. A bit slow, even though technically this is a bullish trend. The quality of this trend is really low. If you just look at that last impulse wave or phase one wave, there was literally only one impulse candle, and that was the first one. So everything else failed to be impulsive, which meant that it failed to break through and close through or above the preceding week's resistance level. And that's a sign of weakness. So what happened, of course, now at the end of last week is we've ringed that high, which means that bullish impulse wave is now definitely over into a bearish wave. Now that might come to an end quite quickly. And we would only, if you want to get a head start on that coming to an end, you'd need to look at the daily time frame. Well, let's actually go to the appropriate chart. And we would need to see cyclicity reverse itself here. So at the moment, we do have bearish cyclicity with a bearish impulse wave. Look, this might just go sideways. Of course, we know it's the 3 R's. The first of the 3 R's is the potential for a range. The second is a reversal. The third is resumption. So if we were to get a resumption here, we would need to see a breakdown in this bearish cyclicity and a bullish resumption. And we haven't had that yet. So nothing doing right now. We leave that one alone. Right, Kiwi Swiss. You can see last week we had a strong bullish impulse candle on weekly, but that also did ring the preceding week's low, which means that this bearish cyclicity is definitely now over. And again, the 3 R's kick in. We don't have a trend. We don't have anything there to look at in terms of our core strategy, so we leave it alone. But looking at the daily time frame, slightly different story here, obviously, where we did get a bullish breakout. Happened a couple of times, pulled back on Thursday, obviously with all of that volatility. It closed again outside on Friday. Now, I haven't updated the chart yet for today's activity because we've still got some time to go. But should we not get a higher high today, then this high will also be ringed. And basically, we're saying that this is just pretty much chopping sideways. Even if technically one could argue that it is a trend, it's very weak. And we don't trade those. So we're not interested in that at the moment. Kiwi Cad, you can see this retracement here on the weekly time frame. Look, as of the end of last week, I was noting that this resistance level was holding up. Not sure if that's going to continue though. So if that's the case, then this strong bearish trend would have turned weak. But that we'll only be able to determine at the end of this week. However, this could easily roll over, ringing that high, bringing us back into the next bearish impulse wave. Either one of those could happen. Right now, we sit on our hands and bide our time, unless, of course, you are trading the hybrid strategy on the daily time frame, where you're going to be looking for a breakdown in the sequentiality of the cyclicity here on this time frame. We can extend that slightly. We'd also be looking for a break in this dynamic level of support, which is the trend line, and look to see bearish cyclicity reestablish itself. So if we do see a breakdown in this bullish cyclicity, you're really aggressive depending on what type of pattern you trade there, whether you're waiting for class 2 or if you're prepared to go for a class 3, then that's all well and good. Obviously, we know how the hybrid strategy has a very high reward to risk ratio, but a lower success ratio, and that's part of the reason why. All right, so that's pretty much it on the currency instruments. And as you can see that there's not as much to trade there as we would have expected with all of the significant market volatility. But moving on to gold, you can see that here on our first of the commodities that we look at, certainly being a metal, you can see that we did have the breakout on Thursday. Very strong move on Friday, but it reversed itself completely and came all the way back down, giving us this inverted hammer or high test, which doesn't bode that well for the bullish breakout. But we're not second guessing the market here. We are obviously looking instead to see if our final conditions are met here on the daily time frame if you're trading the daily impulse. As yet, nothing. But should today turn around and close above Friday's high, then I would certainly say we've got the potential there to go for a daily impulse. A mess in the cyclicity here. I don't dispute that, but that's typical around these times. But there is potential, certainly, for gold to strengthen a lot more. And that's also part of this rush to safe haven instruments. Right, the first of our indices, you can see it again last week, and this is what was surprising for me, when we saw the bearish breakout initially, that wasn't surprising. What was surprising was what happened on Friday, where it came all the way, on Thursday and Friday, where it came all the way back. And just to reiterate, this is why we don't try to predict the market, because you can't. I have spoken to many people, colleagues, ex-colleagues of mine, and have been chatting to them over the course of the last week. And I can tell you that that pretty much caught everyone by surprise. Oh, excuse me. Right. So here on the daily time frame, we got that marginal breakout on Wednesday, and then staying outside on Thursday with a low test, but it pulled straight back into the channel on Friday. Now, you guys also know that the trading indices is not quite the same as trading the currencies, as anything related to the stock market is not symmetrical. The market doesn't go up the same way it goes down. But nevertheless, these are very good looking patterns, and I'm looking to short some of these should our conditions be met. All right, so that's the Dow. Let's look at the S&P. You can see a similar picture on weekly, respecting that support level, the channel support level. Similarly, having a breakout and pulling back inside. So almost exactly the same picture for our purposes. Nasdaq, obviously, as we know, which is a bit of a leader when it comes to what happens on the charts. Excuse me again. We have been outside of that channel, as you know, from our previous sessions for 3 weeks now. And again, last week, there was, and the week before, we were very much looking to trade this. And there were plenty of opportunities. There was, in fact, a daily impulse short that took place, I think, in this vicinity over here. And if you're using short targets, you absolutely hit your take profit. But if you're using the deeper targets, then you'd still be in the trade. But yeah, I mean, your stock would have been trailed to above that high. So not quite at break even yet, but you've given yourself enough flexibility that you would still be in the trade. Let's see what happens. Again, interested to see that the market is starting to come back a bit through the course of today, but it did gap. The futures market did gap over the course of the weekend, and that is pretty interesting. Let's have a quick look at, this is the Nasdaq, but let's see what the gap was. Gapped, sure, okay, 451 points. So, pretty interesting that the markets are showing as much volatility at the moment as they are. So certainly tradable. Right, oil on the weekly time frame. There you can see that huge volatility on oil through the course of last week, and again another gap over the weekend, which is very much an indication that the conditions are moving towards higher risk and away from lower risk. So you can see what that looks like here. And a lot of that news came out obviously on Thursday, where we saw all of that volatility. Friday came back inside the channel, but then also gapped over the course of the week, and it's sitting outside of our channel. So this again is one where we're only looking to go bullish at the moment, and let's just keep an eye on that. Certainly, our strategy rules. If you're looking to trade this on H4 impulse, then why not? And that's definitely that counts. So what a lot of people have asked me in the past, and this is something that we have in our trading, obviously, is when we have these very volatile days, we actually ignore the wick and the tail of the candles. We've had this discussion before. I remember teaching, some of you folks were even around at the time when we had the US elections back in 2016 and Donald Trump won. There was some massive volatility in the markets at that time as well. And that was also a time where I had to explain why we don't include a wick or a tail in moments like that. All right, so that's oil. What else have we got? Bitcoin not showing as much movement, still bearish overall here on weekly. And this is one where we're still in a trade. It's a daily impulse, bearish daily. No, it's a beg your pardon. It's actually a hybrid. It's a bearish hybrid, which I've spoken to you guys about, I think, in our last session a week ago. And as you can see, have been in a bit of a retracement wave with that volatility also on Thursday last week. We've survived it so far. Look, we're actually at break even on this. and not far from the stop, but you know, it's not going to cost us anything to find out. It's we're in a risk-free trade on this at the moment. And if we were to take the standard hybrid target, you can see the reward to risk ratio on that is pretty high, as hybrids tend to be. Unless, of course, we use the advanced targeting, in which case it stands, well, it gives us the potential for even higher reward to risk ratios. All right, so that's Bitcoin. Finally is US treasuries. And again, you know, here is something of a surprise for me, but it's not. We'll drop it and look at this on the daily with probably a bit of a better indication, but you can see how we are still in a phase 2 retracement wave here on the weekly time frame. So in times of trouble, you expect to have a lot more strength in terms of US treasuries, but this is still showing bearish overall, which is interesting. And here on the daily time frame as well, yes, volatility, some volatility through the course of last week, but not nearly as much as we've actually experienced before that. So as I said at the beginning of the session, may well just be that all of this is priced into the market already. All right, folks, so that's everything, to be honest. And if you've got any questions for me, please don't hesitate to drop them into the comments below. I will answer each one personally. As always, if you are getting value out of our sessions, I'd appreciate it if you hit that like button and subscribe and hit the notifications bell so that you will be notified each time I bring out new material. All right, folks, so on this lovely Monday, the last day of February in 2022, I hope you have a fantastic week's trading going forward. Please be careful. It is a highly volatile period and you don't want to be caught with your pants down. So, and if your trading strategy rules are met, then go for it, but make sure that you manage your risk first and then let the profits look after themselves. All right, folks, have a fantastic week. I'll chat to you all soon. Bye for now.